Hello and welcome to Chartbusters. Well, it's a good start to the trading session. We're up close to around 85 points odd, but as we know, it's expiry day, so it's not so much about the start, but where we finish. It's been a good series nonetheless, so let's see whether or not the bulls can end on the high. Hey, Mangalam, things looking up.
Things looking up, 750 points for this series, including the 80 points that we're gaining right now. But like you pointed out, things in the last hour could get a little wobbly because the way the options have been written at that 17,600 mark, both calls and puts put together, signs are of a resistance around that 17,700 to 17,750. Were we to sustain above that, there would be some more short covering. Let's see where we go from here. First up, all the top stories. We have the markets, a strong start for the Indian market for the expiry session. PSU banks and realty finally rally. We have Nifty reclaiming that 17,700 mark, but as we speak, it's given up some ground as all sectors apart from IT and pharma trade with gains. The broader markets outperform.
Airtel promoter Bharti Telecom to hike stake in the company. Singtel is set to sell 3.3% stake, worth around 12,900 crores to the promoter entity. The stock is up close to 100%.
PSP projects buzzing after winning new orders worth 247 crore rupees. With this, the company's total order flow for FY23 has crossed 1340 crore rupees.
RBL Bank's rally continues after college retirement fund bought close to around 50 crore rupee worth of shares in yesterday's session. The stock has gained now a whopping 30% in this week.
All right, we're just looking at a couple of stocks from the broader markets. They're buzzing and how. And talking about buzzing, Nigel, United Spirits, it's just Thursday, going into the weekend, 4.5% higher on that stock, doing extremely well. In fact, in today's trading session, the gains that it has made has actually gone ahead and negated the losses that we had in the earlier 3 days, and now it has turned positive for the week itself. And then there are a couple of other stocks which are gaining. We're not sure about the reason why. L&T Finance Holdings up 8%, BHEL up another 8%, but these are stocks which are usually, volatile. They gain a fair ground and then they lose as well. So we'll keep an eye out on these. Important to get in a quick technical voice on the market. Then Sachidanand Uttekar joins in for a quick check. Sachidanand, 17,700. What's your sense? Where do we, close at the expiry move? And what are the individual stocks that you're tracking?
Good morning, Mangalam. Good morning, Nigel. Clearly, the way both the indices have started, I think, they are trending well above their 5-day exponential moving average. And especially if you look at Nifty, despite of the up move, we are seeing some more consolidation here. But eventually, the kind of data it has been displaying, I think the expiry should be somewhere comfortable above 17,750, 17,780 kind of a zone. So net, I think it's a good idea in case if we see this consolidation. I think this consolidation will again be an opportunity to create fresh long positions. The stop loss for Nifty should be placed at 17,620. We don't see an expiry below 17,600 from here on. And the expiry pain zone, which is right now somewhere close to 17,700, we see it, inching higher. So probably 17,750 is the level that we are watching out for today. When it comes to Bank Nifty, clearly the gap support at 39,000 is holding strong. And even here, we are expecting the expiry to shape up somewhere close to 39,400, 500. So we may not see a major contribution from the financials here on, but I think Nifty should continue on the higher side.
Sachidanand, I presume you're Maharashtrian. Just wanted to know, would you be aware of when Shravan ends? Because usually we see, a big surge in all these alcohol stocks near the end of Shravan. I presume it'd be somewhere maybe in the last couple of days or the next couple of days.
I think it should be very close now, because yesterday itself we had a particular puja in our home. So I think presuming that particular trend and the way McDowell's is again respecting that support at 750.
So are you guessing the end of Shravan because of the move in the stocks, or are you guessing the move in the stocks because of the end of Shravan?
I think both are complementary right now, because I think the stock is also displaying signs of demand. So probably, the 750 zone has been respected well. And if you look at the structure itself, it looks like a falling wedge formation, which is about to mature. So definitely, one should keep this particular stock on your radar.
Well, Sachidanand as well as Mangalam, get back to markets. I'm struggling to concentrate after that sort of a conversation. We have got another day guys. So let's wait. But thanks so much, Sachi, for joining in, giving us your take on the markets, giving an update on Shravan as well as on United Spirits as well. Good speaking to you, as always. Well, for the time being, though, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta joins us to tell us exactly that. Jitendra, which stock are you tracking?
Cochin Shipyard deserve attention considering strong earnings visibility and valuation. At current market price of rupees 340, it is trading at around 8 times its fiscal 23 estimated earning, which is quite good in the light of strong order book, improving revenue visibility, zero debt, cash in the books, and of course a dividend yield of close to 4%. Cochin Shipyard is among the high quality defense ship builders. Due to execution capabilities, domain expertise, technology and scale, the business enjoys a very high entry barrier. In terms of business, due to COVID-19, the company had suffered, but now with labor and other issues easing, it has seen improvement. During the quarter ended June 22, it reported strong 34% growth in revenue, and profit jumped by almost 53% on a year-on-year basis. With higher scale and margins, the earnings profile is improving. Steady improvement in execution coupled with high order book means that the next few quarters would be even better. It has an order book of close to 20,000 crore, which is 7 times its annual revenue, providing very good revenue visibility. Overall, it's a great buy for the long term.
All right, Jitendra, thanks a lot for that. With that, we sit into a short break. On the other side, you don't go anywhere. We'll be getting the management of Ratna Money Metals on the order win that the company here on Chartbusters. Let's talk to the management of Ratna Money Metals. The stock is on our radar today as the company has won orders worth nearly 1,200 crore rupees. To tell us more about this and the outlook for the business, we are joined by Manoj Sanghvi, who's the business unit head at the company. Thanks a lot, Mr. Sanghvi, for joining in. It appears like it's one of your biggest order wins. Can you give us a sense of how much this order has been split into in CS and stainless steel pipes, and where is this order coming from? Which sector?
Morning.
Morning. Go ahead.
So we booked an order from the 1st of August to 15th of August, approximately 1,200 crores. Most of it is carbon steel pipes. Approximately about close to 100 crores is from stainless steel. Rest all is for carbon steel pumps.
Okay, all right. Hi Manoj, good to have you on the show. So around around 1,100 crores would be carbon steel, and the remaining would be 100 crores odd would be stainless steel, right?
Yes, correct.
Okay, all right. Now, which sector is it coming in from? My guess is that it's coming in from the waterways segment. If you could confirm that. And also, in the past as well, on the con calls, you have said that there are several water projects that come on stream. So, could you tell us what kind of margins would you enjoy on this sort of a project?
So, coming to this segment of the total 1,200 crores, roughly 70% is for water, which 802 crores is the single order, which is the largest in the history of Ratna Money, which has come from a water project in Rajasthan.
Oh, okay. All right. Water project in Rajasthan. So there is plenty of scope then. These water projects have started going. The country has been waiting by for these projects. So I guess, you'll be eyeing plenty of business out there. Given that sort of a backdrop, what kind of margins will you enjoy on this? In the first quarter, your margins came down drastically. But otherwise, on this particular project, what kind of margins will we look at?
We are seeing a lot of thrust in demand in the water segment. So definitely there's a little pressure on the margin, but we try to remain, because still there's 30-40% of oil and gas orders which are booked. So those are a little better margin. So on an average, 14 to 15% EBITDA is what we should look at.
14 to 15% is on the blended company outlook for this year, or is it just on these orders?
Just on these orders, as well as on the company overall, we try to remain in that range between 14 to 16%.
Right, because I remember the last time we spoke, you did say that you were looking at anywhere between 16 to 18%, but be that as it may, give us a sense of your stainless steel, order book that you have right now. Can you break up your entire order book, including this order? How much of that is from stainless steel pipes? Because that, I believe, is the margin driver for the company.
I would disagree over there. We have orders in carbon steel which are also margin drivers. As on 1st August, our order book was 2,345 crores. Post this order booking, it is now highest ever, which is 3,500 crores. Of this, roughly 25 to 30% is stainless steel.
25 to 30% is stainless steel. Okay, all right. But so your margins now it looks like you're not so optimistic about getting to the high teens. You're sticking in that band of around 14 to around 16%. Okay, we get that then. What about for revenue growth for the year? How should things look like? What kind of a I recall the last time you joined us, you were talking about a 20% growth. Do you stick to that, or do you believe because now you're getting new orders, you'll start executing some of them? Will that number be better?
So the orders what we've received is for a longer duration. So we still stick to that 20% number with, of course, the commodities being at a constant level. So 20% is what we are targeting.
Can you define longer duration, this 1,200 crore order book? How many years is this executable over?
Will go on until the end of next financial year.
Okay.
So FY24.
Yes.
So FY24, then I'm just suspecting that 20% this year in terms of revenue growth. For the next year as well, things will look up if you're going to be executing this 1,200 crore order. So what should the revenue growth be for FY24? Normally we want to know about the near term, but we can talk about FY24 since visibility is there now. You can do another 20% or more than that?
It is very difficult to say right now because this is the first order we book for such a long term.
Okay.
But yes, we target to be around 15-20% revenue growth rate, and we are working on to see that minimum of 15-20% is achieved.
Okay, all right. You had this hot extrusion 20,000 tons odd that came on stream or was to come on stream. You could correct me on this, but could you tell us how is that ramping up? What is the current capacity utilization levels if it's already been commissioned? And that's I think another margin driver for you.
So we had two major expansions which had come into commercial production this year. One is the extrusion press, which you're talking about. There we plan to utilize 25 to 30% of the capacity this year. Another is LSAW carbon steel pipe manufacturing plant. There we plan to utilize about 40% of the capacity.
Okay.
All right. And can you give us a sense of, what your order inflow target for this year would be? Because, I mean, you've won an order in an area which you haven't won before. So that opens the gate for a lot more other orders. So are you participating in any of those tenders? How does this process work? Can you give us a sense of how much we can anticipate in this year, and if not this year, maybe next year as well? How big this could be for you?
As I mentioned, there's a lot of thrust on water projects. We're building a lot of projects in Gujarat, Rajasthan. We are expecting quite a few orders, but we are also cautious because finally the water segment is much more competitive than the oil and gas segment. And just to keep the margins also in watch, we are not going very, very technical.
Okay, all right. Split up your order book for us, Manoj. How much of it would be, coming geographically? You mentioned Gujarat, Rajasthan, I think so. If you could give us a rough geographic breakup. And also, I believe you were planning on setting up a plant outside Gujarat. As of now, I think most of your plants are in Gujarat. So what's the plan? What is the capex of that front? Both those two aspects, geographic breakup of order book and expansion plans out of Gujarat.
So of the total order book, I would say most of 50% is oil and gas and 50% is water. Water is mostly on the western part of India, whereas oil and gas is pan-India. So that's how geographically our order book is broken up. And on the new plant, we are yet to finalize the location, which in next 2 to 3 months, mostly in the eastern part of India. So in next 2 to 3 months, we will be identifying the land and working on the other things.
That's interesting. Eastern part of the country. I mean, what's the kind of rough capital expenditure plan that you have on this new plant?
180 to 200 crores is what we expect, because it will be a pipe plant as well as the coating plant.
And you will fund that internally?
Yeah.
And I think in the past you mentioned that asset turn normally is around...
Most of it will be internal.
I think in the past you mentioned asset turn is 2 times odd, right? So this plant will come, will be able to, when it's complete, it will give revenues of close to around 400 crores?
More than that.
More,
How much?
3 times?
Close to 500, 550.
So 2.5 times, 2.
So, we have two major,
Yeah.
we have two major expansions, capex plans. One is stainless steel cold finishing, and another is carbon steel pipe at a different.
No,
pipe plant at a different
Manoj, I'm referring to
so
this.
both put together, it will be 2 times.
No, Manoj, I'm referring to this plant that you're planning on setting up in East India. You said that you'll spend around 180 to 200 crores. So what is the asset turnover for this? And how long does it take to set up a plant according to your estimates? From the time of finalization of the land, how long will it take?
It will take maximum 18 months.
18 months.
And it can be anywhere between 2 times to 3 times, depending on what sector.
And it ramps up immediately, is it? Or it takes gradual time, it takes some time to gradually ramp up to full?
It will take a little time to ramp up.
Okay, no, because what we're trying to understand is, say 3 months from now you finalize the land, etc. It takes about 18 months, so that brings the story to FY25. And that year maybe would be the year of gradual ramp up. By FY26 is where we can expect this additional 500 crores. Is that correct?
Yes. You're correct.
All right. Take that point, Manoj. Thank you so much for joining in and giving us the outlook on your business, and wish you more orders in the space that you recently won orders in, and more so, which are more margin accretive as well. With that, we take a short break. On the other side, we get you more on the markets as well.
Back, no worries in the headline index. Nifty is up close to around 85 points or thereabouts. Pretty good going. Mid-cap index as well, moving in step. Well, let's move on then. And what's likely to be a sentiment dampener for fertilizer makers? The Ministry of Fertilizer and Chemicals has issued a new packaging rule under which the fertilizers will be sold under a single brand name. Well, Sonal joins us to explain all of this to us. Sonal, take it away.
Thanks a lot for that, and that's right. The government, they came up with a notice, that is the Ministry of Fertilizer and Chemicals, and they said that they will be issuing packaging rules for fertilizer companies. What this means is that the government is saying they will implement one nation, one fertilizer scheme, and they will introduce a single brand for all the fertilizers across both the sectors, private or public, and across brands as well. So single brand name for something like urea would be Bharat Urea, for DAP will be Bharat DAP, for MOP and NPKs, it will be Bharat MOP and Bharat NPK. So that is the name that they have suggested. So additionally, they will also speak about the subsidy name, and that is something that will be printed on the bag as well. So the government says that 2/3 of the fertilizer bag will be used for new brand name, and also logo of the fertilizer subsidy scheme that is issued by the government, and the remaining 1/3 of the bag will be used for the company which is actually producing that fertilizer, the logo and other information. It is, of course, likely to be a sentiment negative for these companies. However, important to note that these companies in the private sector or the listed space, they have strong brand recognition. So in the longer term, their revenues will not get impacted. So today, we could be seeing some impact on these companies. But other than that, it is not such a big negative as it looks to be.
Take that point, Sonal. Thanks a lot for that. In fact, on the other hand, we are seeing a big bump up in a couple of these stock names like RCF, UPL is moving higher. Let's see how much of that packaging impacts the revenues of people who already have strong brand loyalty, as Sonal said. But let's also, in the meanwhile, hear out what Standard Chartered's Fook Hin Yap had to say on the Indian market.
We also see India outperforming Asia ex-Japan equities, so we have a preferred view for India equities. And the view there, I think, very much is driven by what we see as still a strong domestic economy. And I think we're seeing very strong earnings growth, double-digit earnings growth, I think, for the 3rd consecutive year in India for the Nifty index. So, and that's much better than other places. In other places like China and Asia, it's looking at single-digit, and it's been actually being downgraded, whereas in India, actually, it's been quite positive. So, across against that, of course, is always the valuation premium for India equities. It's trading at a premium to its other peers, and the premium is actually above the historical average. The view that we have is more on a large cap in India. We prefer the large caps to the mid and small cap. We think that's going to be a bit more beneficial in terms of the domestic macro strength. but also, being in a bit more of a volatile market situation, we think the large caps are the ones that we do prefer. And the other tilt that we have in India actually is towards the value-driven stocks. And that's another theme that we have globally as we see rates going up. That's actually beneficial, we think, for value. So, value did very well in 2020, 2021. This year has been a bit mixed, but we do see the strength of value stocks broadening out. And that is actually another theme that we prefer within India.
Well, let's shift focus back to select stocks and let's focus on the communication space. Then Airtel's promoter entity, that's Bharti Telecom, is looking to hike stake in the company, with Singtel likely to sell close to 3.3% as per the disclosure. Nimesh had given us a heads up that this was likely to happen. He joins us to fill us in with more on that front. Nimesh.
Hi, Nigel. So, as you rightly pointed out, so Singtel is looking to sell 3.3% or sell or transfer this 3.3% in Bharti Airtel to the Bharti promoters. So, that was an official disclosure last night. Now, what I understand from sources, it's likely to be an off-market transaction. So, looks like the overhang or the supply overhang of this particular block will not be there, at least in the market. So, that's another feedback from what I understand from sources. Now, as indicated, they're looking at a price of around 2.2 Singapore dollars, which is around 13,000 crores. So if you divide, if we do the reverse calculation, it works out to around 650 rupees per share. But the fact is that it's most likely to be an off-market transaction. The disclosure very clearly mentions that in the next 90 days, this whole 3.3% will be transferred. Given that both are promoter entities, it will be transferred from one promoter entity to the another promoter entity. So post this transaction, Singtel will hold close to 10% or 10.5% to be precise in Bharti Airtel, and the promoter entity, the Bharti Telecom stake, will go up to close to 39%. But as things stand, because it's an interstate transfer, it's likely to be an off-market transaction, and it will be executed over the next 90 days from here on. So no supply overhang, and the fact that 3.3% is now disclosed will be most likely done in an off-market between Singtel and the Bharti promoters.
All right, Himesh, thanks a lot for that. So that's the update on Bharti Airtel. With that, we're out of time on this edition of Chartbusters, but you stay tuned. Trading Hour comes up next with the news of the market as steady as she goes closer to 17,600 rather.